Oh my. Oh my. Dang it. What up, everybody? Welcome to the StackSats Show, your beginner-friendly guide to saving in Bitcoin. I think I just did a whole stream for about an hour when I didn't hit start stream. No! Leonard, this whole time, it was just sitting there waiting, right? Oh my gosh. Oh my god. I did a whole hour, dude. Did a whole hour. It's okay, we're gonna do it again. This is important. We're gonna do it again. Here we go. Woo. Oh my god. Alright guys, today we're gonna talk about Bitcoin is on sale. We're also gonna cover everything that's in the little chart that we do today. I just went through every single box in here and explained what everything was. We're gonna do it again because I accidentally didn't hit the start stream button, and I was streaming my life away to myself, and I wasn't even recording it, so that's sad. All right, well here we go. That's what we're doing today. But before we start the show, let's get into the first segment of the show, which is Sat Strength. Sat Strength. Oh my god. I'm still in disbelief that I did the whole show and didn't stream it. Jeez. All right. Today the price of Bitcoin is $41,115. In other words, 2,432 Satoshis per dollar. What is a Satoshi? A Satoshi is a fraction of a Bitcoin. Just like a penny has 100 cents, a Bitcoin has 100 million Satoshis. People like to call the Satoshis sats for short. So here you have the sats symbol. Looks like a little shish kebab. Per dollar is $2,432. Another way to look at this is, let's say you're walking down the street, minding your own business. You see a penny, you pick it up, and all the day you'll have 24 Satoshis. One penny can buy you 24 Satoshis. It's amazing. It's a great deal because when Bitcoin hits $1 million, one Satoshi will equal 1 cent. Okay? All right. So that said, today during the show, we're going to cover all the boxes here. What all these boxes mean. Oh my gosh. I can't believe I'm going to do this all over again. We're going to cover what all the boxes mean here on this chart. Okay? So let's get going. Let's start the show. This is what we call the Why We Stack segment. Why we stack. Okay, during the Why We Stack segment, we do a little bit of an explanation of what Bitcoin is. Today we're going to go and cover the different facets of Bitcoin that we have on this little tracking site that we use all the time on our show. We use the satstats.net website, and let's jump in there and talk about what those different things mean and why they're important to track. Okay. First of all, the price of Bitcoin, of course, it's important to track that because you have tells you how much your Bitcoin is worth, right? If you have one Bitcoin, it's worth $41,122. If you have half a Bitcoin, it's worth $20,562, something like that, right? So you want that's an important number to keep track of. Okay, it's pretty self-explanatory. Okay, we have the transaction fees. We have the low, medium, and high transaction fee priority. So the way Bitcoin works, we have a memory pool that catches all the transactions that people are trying to make within the Bitcoin network, right? And Bitcoin has what's called a block of transactions, and that block of transactions has a limited space. Think about it as a train. Okay, it's a train leaving the station every 10 minutes. Okay, every 10 minutes, you can put your transaction on the train, and if your transaction gets on the train, it gets processed. If it doesn't get on the train, it's waiting to be validated, waiting to be verified. Okay, it costs money to get on that train, but they don't care how much you're transporting on the train as far as the value you're trying to transmit. What's important is the space it takes to write on that train. So think of the train, similar train analogy, but instead of having seats, it's got space in the that we like to call V bytes, right? It's got bytes of space, virtual V bytes of space. And so the cost per V byte is dependent on the priority you want to give your transaction on the network. What up, Carl? What up, Leonard? Woo. Doing the show for the second time today. Let's go. Oh, that was a block. That train just left the station, and there's a whole bunch of transactions jumping on. Okay. So what governs what gets on the next train cart? As you just saw, all those transactions jumped into the train cart, and those transactions got moved in there because they're probably the ones that are willing to pay a higher fee for the transaction to happen. When I'm moving my Bitcoin from my exchange to my self-custody wallet, I don't want to pay 99 sats per V bytes or 100 sats per V bytes. I can handle waiting 30 minutes, an hour, 6 hours, right? For the fees not to be so high, for the Bitcoin network not to have so many people trying to transact in it, right? Or if I'm really concerned about it and I want my transaction to happen ASAP in the next block, in the next 10 minutes, then I want to blow past the 101 sats per V byte, okay? So again, you're paying for the amount of data you're writing to the block. You're not paying a percentage of the value that you're trying to transfer, right? That's what the banking system does. The banking system charges you a percentage of the value you're trying to move, right? Where was that? Go. Here. Dang, I lost that page. Here. Yeah, here. Okay. So, let's say that this transaction, this transaction has 30 outputs. It's sending it from one address to 30 addresses, right? So that's going to take a lot more space on that block to write all those different wallet addresses, right? So their fee is about, what is it? Their fee is 128,000 sats, right? That fee. Now this one, that block just went through. Wow, those blocks are moving fast. Wow. So now this block only has 2 outputs. So they're going to write the amount of Bitcoin that needs to be transferred, and they're going to write the 2 addresses it's going to. And that's only going to cost them 15,000 sats to run the transaction, right? And they're moving $1.82 million, but it's still only going to cost them 15,000 sats, right? That's like $3 or $4, right? Whereas this guy, where's the big guy with let's see, this final with a bunch of transactions like the other one. This one, 199 outputs, and he's moving $144,000. He's paying a whole lot more than the guy moving the millions, right? Because he's writing so much to the block. He's writing 199 outputs. It's going to cost him 434,000 sats, almost 435,000 sats to write that transaction. Okay, so you're not paying for the amount of money you're moving over. You're paying for the amount of space that you want to write to the Bitcoin ledger. Okay, think of it this way. I have a spreadsheet, and I'm manually writing down your transaction, and it's going to cost you a certain amount per line, right? And you want to send some Bitcoin to Leonard. So, okay, I'm going to put, 1 Bitcoin to Leonard, and it takes me 1 line. I'm going to charge you that much space, right? Or if you want to send 100, let's say 1/10 of a Bitcoin to 10 people, right? Then I'm going to charge you for 10 lines of space because you're sending it to 10 people. Now it's going to cost more. It's going to take up more room in the limited space that's my block, right? So that's how the fees work in Bitcoin. They're not based on the amount of value you're transferring over. They're based on the amount of space you want to write to the ledger, which is the block, which is the blockchain, which is Bitcoin block, right? Okay, so I hope that explains these. And these are a ballpark recommendation. See, like it just dropped, right? If you want lower priority, it might happen within the next, hour to a day. You put in your transaction, you tell it you want to pay 74 sats per V byte. And then it figures out how many V bytes you have, and it calculates your fee. And then you can see how much it's going to take, how much you'll need to pay, depending on the level of priority you want for your Satoshis to go through. Okay? All right. Sorry, for your Bitcoin transaction to go through. And that's important. Okay, so who gets those fees? Those fees are a mechanism that the miners get in return for processing the transaction for you, right? Because there's no Bitcoin bank that has computers running to run your transactions on your website, right? No, they have miners that volunteer their work. No, they don't volunteer. They have miners that do the work for the Bitcoin network, and in exchange for that, they get paid the fees that people are willing to pay to get their work, to get their transactions processed, and the reward for mining the next block, right? So, in this case, what drives what transactions get into the block is the ones with the higher fees, because the miners want to process those first because it's more profitable for them to do so, right? So as the Bitcoin network gets more and more busy, the fees can go up, right? But if you don't have to run your transaction today, like right now, you can just do a lesser fee and run it at night, or like sometime during the day where it's not so busy, where everybody's not trying to get their transactions on the next block. And remember, we have blocks happening every 10 minutes. Since the beginning of Bitcoin, a block has been happening every 10 minutes, and it will continue to happen as long as there's processing power on the network, okay? So that's how that works. That's what the transaction fees means, okay? So just different priority levels. It's a guideline. But if you wanted to have super priority, you probably put more than this, right? Anyway, that's how it works. The block height is telling you since the beginning of Bitcoin, 14 years, 241 days ago, when Bitcoin got started, at block 1, you can still go back on the blockchain and look at that block and see what transactions were made, right? Now, the current block is 820,756, and you can see that here. This is the current block, and these are the transactions that are getting on that current block, right? Once this block clears in about another 5 minutes or so, it's 10 minutes each block. That block gets processed, gets written to the blockchain, and it's there forever, and nobody can modify it. And then the next block opens up, and all these transactions will try to get on there. The ones with the highest fees will get processed. And these transactions falling out of the sky here, those are new transactions coming into the memory pool, being queued up for the next block. When the next block happens, some of those transactions will move into it. And just because this block came in just now, this transaction came in just now, doesn't mean that it gets to go last because this guy right here happened first. No, what matters is how many sats per VByte you're willing to pay for that train ride, right? So this guy's willing to pay 96.82 sats per VByte. This guy's willing to pay 492 sats per VByte, so he's definitely going to get priority, right? So, but his fee ends up being 62,000 sats, and this guy's fee ends up being like 13,000 sats, right? So it just depends. What up? Matthew in the house. What up, Matt? I did a whole hour's worth of explaining this, and I didn't hit record. I didn't hit live stream, dude. I'm so worn out. Anyway, so that's what that square means. And now that Matt's here, maybe you can help me figure out what this means. Matt, do you know what this little symbol is? This little B with a line through it? Or is that Bitcoin per dollar? No, that's not it. Anyway, all right, let's keep going. Now let's talk about blocks per halving. Okay, so here, what it's telling you is that it's gonna take 19,244 blocks, and each block is 10 minutes, until we get to 840. Yeah, until we get to 840,000, to the 840,000th block. Okay, once we get to the 840,000th block, that's when the halving happens. And what does a halving mean? That means that the amount of supply of unreleased Bitcoin that goes into the system, the rate at which it gets released is going to get halved. Right now, we're getting about 900 Bitcoins released into the ecosystem every day. And when the halving happens, we'll have 450 Bitcoins released into the ecosystem every day, which is half the supply, right? So that is part of the Bitcoin halving and part of the cycles of Bitcoin. See how every halving, the supply of new Bitcoin drops in half? And so it triggers the bull run, and people will overpay for it, and then it comes back down to equilibrium or whatever, but it never goes back down to like below. So what happens is every halving. So here's and you have like the the bear run, which is down, right? So here, this is what happened last time. The last halving, we're about what was the price? Like $1,200, and it went all the way up to 67,000, right? And then you have the bear run, which is what we just lived through, and then the halving is going to happen in about 130 days, so in April, right? And again, it's not based on a certain date. It's based on the amount of blocks until we get to 840,000 blocks. And if you take 19,243 blocks, so 19,243, and you multiply that times 10 minutes, you have 192,430 minutes divided by 60 gives you 3,207 hours. Divide that by 24 gives you 133 days until the halving happens. Give or take, because sometimes, depending on the hash rate, which we'll get into next, where is it? Where's the hash rate? Yeah, right here. We'll get into that eventually. Depending on the hash rate, some blocks get solved under 10 minutes, and some blocks get solved over 10 minutes. And it's just a matter of balancing the amount of hashing power that the world has put onto Bitcoin. Okay, so let's go to the next thing. The last block is telling you how many megabytes of data were written to the last block. Okay, let's see. 24-hour trade volume. This is telling you that $40 billion worth of buying and selling has been done on the Bitcoin, as far as Bitcoin goes. Like people selling in and out of Bitcoin in terms of dollars, right? So that's how much the volume is. And I don't really care about those things because I'm not a trader. Same thing with this. This is just giving you the 24-hour chart. So this is when we started pumping in on the 4th. It came up, and then today it dropped about, dropped about 8.5%, right? But this is what we try to avoid, guys. We don't want to look at the price every day because we don't care. Over the long term, it's going up. And these things here are opportunities for the market makers to trick you into buying and selling at the wrong time. Okay, they want to make you think, okay, it's going to keep going up forever right here. They incentivize you to buy as it's going up, and you get excited and you buy at the top, right here. And then they reverse it on you, and you get scared into selling it lower than you bought it because you think it's going to keep going down, and you already feel like you lost 8% of your value, and it's going to keep, and you feel like it might be going down to here or here, and so it triggers you to sell at a loss for the sake of saving whatever value you have left, right? And then they induce you again with market manipulation to seeing these ups, and you're like, oh, it's going up, I'll get in later. Oh, it's going up. Oh, you know what? It's going to keep going up. I'm going to get in again. You get in again, and they just keep doing that over and over again, right? So the way we avoid the manipulation of the market maker is just to dollar cost average, because we know that over time, if you take this chart, right, and stretch it out, like it's still gonna keep going up, right? It's just gonna keep going up, especially if we look at the chart in terms of when the halvings happen, right? So let's go back to the halvings. Where that, right here, right? So if we're here, it says we're closer to the halving than this chart is showing now, 133 days, and when that happens here. Right here, the price of Bitcoin is going to go up because you're basically limiting the supply by half, right? And that's going to happen regardless of whether ETF happens or not. It happens every 4 years, okay? So imagine yourself back here before all this happens. That's where we're at right now. We're getting close to that point, okay? And so after the halving happens, about a year into it, you're going to get the big pump, right? And that's just going to happen because of the nature of the halving. On top of that, you can take into account the Bitcoin ETF, and if the Bitcoin ETF gets approved, then that makes the Bitcoin halving happen even sooner. Well, not, it doesn't make the halving actually happen sooner. It's going to get the feeling of the Bitcoin having happen sooner. Hard hodl. I saw you in there earlier and you commented, and I thought I was streaming, but I just basically streamed for a whole hour to nobody because I was trying to figure, I was going through the whole show. So what I said earlier that you didn't see was, it's the first time in here. Welcome. Thanks for saying hello again. If you have a wallet of Satoshi set up or any kind of Lightning wallet set up, put your wallet address in the chat, and I will send you 1,000 sats today for being for showing up to the show and for commenting. So if this is your Lightning address, you'll type it into the chat without the @ sign and without the period. So for example, mine would be stacksatshow space ZBD space GG. That way the YouTube algorithm doesn't suck up your Lightning address and not show it to me. Okay. All right. Going back to what we're doing. All right. So that's what we're doing here. What up, Carl? Okay. So now we're going back to the chart and we're going to explain the next segment. Sentiment. Sentiment is kind of what we just talked about. It's how the market makers manipulate you as far as like fear and greed, fear of missing out, right? And greed of taking, like you want to gain, you want to take profits, right? Hey, so I just realized I can just change my name and icon once a week, and you'll send me free sats. If you want to be dishonest like that, you can be, but eventually, karma will catch up to you. Oh man, Bill! Oh man, Bill BTC in the house. Let's go. Ooh, Hard Hodl. I like that one. I like this name, Bill. Hard Hodl. Thanks for fessing up. All right, so we're gonna keep it going. We have hash rate. What does the hash rate mean? Okay, so basically, what the way that the Bitcoin mining works is you have device. So the only way to keep it fair, this is gonna be a long one. The only way to keep it fair across everybody that's willing to mine Bitcoin, because if you think about it, it doesn't take that much processing power to run what's basically a database, like an Excel sheet, right? You have a bunch of text in a file, and you don't need 518 exahash of processing power to run a spreadsheet, to run a database. But everybody on the network, everybody that's mining Bitcoin, everybody that's a node that's running the processing power for the network wants to have a fair shot at being the lucky miner that gets to write the next block. Because when you're the lucky miner that gets to write the next block, you collect the fees that people are paying for the transactions, and you get what's called a Coinbase, which is the reward, the Bitcoin network of right now 6.25 Bitcoin. Okay, so you get 6.25 Bitcoin plus all the fees that people paid to run their transactions. Okay, so how do we decide who gets to mine the next block every 10 minutes? Right, the way you do that is the network has a mechanism to balance out however much hash rate comes onto the network in a way that it still takes about 10 minutes to run the next block. Okay, this is a really difficult concept, guys, but I'm going to get into it, and we're going to do it real quick. So let's say that the Bitcoin network is only run by me, and I'm the only node on the Bitcoin network, okay? And I have to roll a giant die that has 256, that has the probability of 2 to the 256th power. Okay, this is the 256 hash rate. I'm sorry, 256 2 to the 256th power. Okay, and so every time you roll that die, you're gonna get any number in that range. Okay, and so the Bitcoin network says, okay, how can I make it fair when we have a couple of miners in place? Let's say Matthew and I are both mining Bitcoin. He has 50% of the hash rate. I have 50% of the hash rate. How does a Bitcoin network decide who gets to mine the next block? Well, it's kind of a lottery system. And that lottery system is on a really big number, right? And so the Bitcoin network says, okay, Matthew, can you guess at this number? And if your number is below X number, the difficulty number that I'm giving you guys, then you win the block. So whoever gets that number first, whoever gets a number below that difficulty number will be awarded the right to mine the next block. Okay? So now Matthew and I are going to start guessing at this number, and we're going to guess 1 time per second. Okay? And because we're just people, we can only guess 1 time per second, right? And so Matthew figures out that he can use his computer to guess, right? And so I'm guessing 1 second at a time, one hash per second. And Matthew figures out that if he uses his computer CPU, he can guess at this algorithm, I don't know, 100 gigahash, right? That means he can do 100,000 guesses in a second instead of my 1 guess per second. Okay, so now the likelihood of him getting the next guessing a number that's low enough to comply with the difficulty rate setting gets higher, right, compared to me. So now I'm like, hey man, I want to do that too. So I get a machine and set it up for mining, and now both of us are guessing at 100 gigahash per second. So now there's 200 gigahash of processing power on the Bitcoin network because Matt and I both provided that. But now the difficulty is so low because before we were guessing just 1 guess per second. Now we're guessing 200,000 guesses per second. So we're guessing the next puzzle in under 10 minutes. And the Bitcoin network says, whoa. The Bitcoin network is not happy with that because the Bitcoin network wants the regularity of releasing coins every 10 minutes, right? Via the Coinbase feature, okay? So what happens is the Bitcoin network sees that we're providing way more horsepower than it needs, way more hash power than it needs. So every 2 weeks, it adjusts the difficulty so that on average, based on the amount of hash power that is associated with the network, it'll take about 10 minutes to solve, okay? Because remember, once that block is solved, then that person that solved it or the machine that solved it gets to write the transactions to it, collect the fees, and collect the Coinbase reward. Okay, so now with that concept in mind, we look at this number here, and the Bitcoin network has 518 exahash of power running it. Okay, now what does that mean? Okay, we have one. Think of it as like you would on a computer memory, right? We have a megabyte of memory, which is 1,000 bytes. So a megabyte is 1,000 bytes, right? 1 megabyte. 1,000 megabytes is 1 gigabyte. 1,000 gigabytes is 1 terabyte. 1,000 terabytes is 1 petabyte. 1,000 petabytes is 1. Is it exahash? Is that? Did I miss one, Matthew, or did I get them right? So that's 1,000 petabytes of hash power, right? So that's a whole lot of guesses. Okay, so much guessing, in fact, that it takes a ton of power and a ton of just silicon, like a chips, to get so much hash power. And I'm taking a long time to explain this because it's super important. This is why it's on this screen, because the amount of hash power, the amount of hash rate that's associated with the Bitcoin network at this point is so much more than any other computer in the world. Even the CERN supercomputer is the hash rate in Bitcoin is about 5 to 7 times more than the CERN supercomputer that's supposed to track like satellites and stars and comets and that kind of stuff, right? So it's important also because that means that it would take. It's important because there's one weakness to Bitcoin, and that is that if somebody were to take and commandeer 51% of the hash rate or 51% of the machines that are running Bitcoin, right? Or that's one attack vector. They could take over 51% of the machines, which would be pretty difficult, right? Because they're not all in one place. They're distributed along the world in different countries. So one entity would have to go and take over all those machines somehow in order to change the code in any way, right? So when you see a high hash rate, it's telling you that the network is getting more and more secure, right? Because if you go back in our example, and it's just Matt and I running running two nodes, and I have half of the hash rate, and Matt has half of the hash rate. Matt can go buy a third computer, and now he has 2/3 of the hash rate, and he can change the rules of Bitcoin, right? And even if I'm against it, it won't matter because he has more than 51% of the rules. So now his machines can lock me out, right? And so he can change the network that way. It's weak. But if you look at the hash rate now, 518 exahash, it's going to be near impossible for somebody to take that much, to take over half of those mining rigs. That would be one way to do it, to take over more than half of those mining rigs to change the rules and mess up Bitcoin. Or they would have to create another 519 exahash of new hash power that they control to take over 51% of the available hash rate that's running Bitcoin, right? And at that point, the amount of money it would take to buy that many miners and to run that many processors, and to run that much power, right? To build out the infrastructure, to even get the chips made, the computer chips made to make the miners, it's so incredibly, it'd be impossible, right? Just the amount of power generation you would need to basically create 51% more hash rate in order to take over the network. It's cost prohibitive to say the least. And on top of that, you'd invest so much money into that if you got to that point, you'd probably just end up using Bitcoin instead, because you're killing the network. You're killing the network, and your investment would go to zero, because at that point, then it's broken, right? So anyway, when you see a higher hash rate number, it's good. It means that the Bitcoin network is more secure. And as more miners come on board, more hash rate gets put onto it, the more and more secure it becomes, right? So hash rate number going up is a really good sign. Even if the price is going down and the hash rate number is going up, it means that more people are using it and it's becoming more secure, okay? And it's becoming more secure. When I say more secure, I mean immune to changes, immune to attacks from governments and entities and just aliens, I guess, anything, right? Anyway, so that's what that means, the hash rate. Market cap is just telling you how much value in terms of US dollars is currently stored in Bitcoin, right? We have this little chart that we used to look at. Where's it? That tells us the market cap of Bitcoin relative to all these other assets, right? If you look at this bad boy, we have, if you look at this guy, we have, whoops. Oh, I messed it up. No. What did I do? There it goes. If you look at this guy, we have just different categories of where money is being saved in real estate, in bonds, in cash, in equities, in art collectibles, in cars, right? And you look at this number here, and it's telling you what the actual number is these days, like right now, live, is what? Where'd it go? 800 billion. $804 billion is saved in Bitcoin right now. And basically you take this little square and you double it in size, right? When this chart was put out, it was when Bitcoin was like around in the 30s or in the 25s. But yeah, the market cap has gone up, is doubled, right? And these companies that are trying to get the ETF approved, those guys have all of this money in management, right? Okay. So they have all this money in these different things, these different assets, because they know that if they keep it in dollar, it's going to keep losing value over time. You're going to lose purchasing power. So they put it into things like real estate, right? BlackRock owns a ton of real estate, and they basically buy whole buildings and even single family homes and rent them out to make a profit. They're basically using real estate as a form of money, as a form of so real estate has been monetized, right? Even we do it. We know that we buy a house because it's going to hold value, and the price of our home is going to keep going up, but we don't realize that the price of the home is not going up. It's the price of the dollar that's going down that makes it look like our home is worth more. Okay. So that's because real estate is monetized. So as investors start to understand what Bitcoin is and how it works, they're going to realize that compared to Bitcoin, real estate is not as hard, right? You can always build more homes. You can always build more. You can always get new property and build more housing, right? But you can't make more Bitcoin. So what's going to happen is, as they start to understand that their investments in real estate have all of these associated fees and losses, including like if your home catches fire, right? You have to pay insurance on that stuff. You have to pay taxes on it. You have to repair it, right? And you have to deal with people living in your property. You have to manage them. You have to repair things that break when they call you up at whatever hour, right? You have to pay maybe a property management company to take care of that stuff for you. And they take out a fee as well. They don't do it for free, right? So that money, even though it looks like it's making you money in real estate, in reality, when you factor in all of your hours managing it and all of the fees and taxes and the costs associated with managing that property, it turns out that that money, even though in real estate they are paying you rent and you're getting some kind of what people like to call cash flow, in the end, if you had just taken that same amount of money and put it into Bitcoin, it's not costing you anything extra to maintain it, and it's going up at such a rate that even though real estate's giving you cash flow, you're still better off in Bitcoin, right? So as these companies that have all this money in these different assets figure that out, and their ETF gets approved, they're gonna start pouring money into Bitcoin, and that's gonna make the price of Bitcoin go crazy, and that brings us back to the halving. Okay, we talked about the halving, and we said, okay, when the halving happens, it'll trigger the new supply to go down, right? And that'll make the price go up, right? And another 4 years from that, it'll drop the supply again, and it'll continue to do that every 4 years, right? So if you can survive saving in Bitcoin for a good 8 to 10 years, you'll be well ahead of that, and the Bitcoin you're holding is going to be worth so much more that you're going to be in a good place. Well, that's like the worst case scenario, right? The best case, and I want to say worst case scenario. Let's just say that's a good scenario. The better scenario is if you factor in the ETFs, then that's the equivalent of shortcutting maybe 8 to 10 years worth of waiting could happen as soon as the ETF gets approved, because even though the supply is not getting halved immediately, the amount of demand is going to go up so high that it'll feel like multiple halvings at the same time, because the amount of demand the amount of supply will not be able to keep up with the new demand that just got released when the ETFs get approved. Okay, that's why we like to stack sats, because we don't know when that is going to get approved, right? We know that we're going to have the halving no matter what, but we don't know when the ETF gets approved. We don't know when a country is going to decide to take Bitcoin as a reserve asset. We don't know that. We can't predict that. But let's just say a country out of nowhere decides, you know what? We're going to announce to the world we're a first world country, and we're going to take Bitcoin as a treasury reserve like El Salvador did. When that happens, you have no way of planning for that. You have no way of predicting that, right? So, but what you can do is you could be in Bitcoin ahead of everything, right? Once you're in Bitcoin ahead of everything, that doesn't matter. Then you just buy Bitcoin, you stack, and you wait. Okay. All right. So either way, short-term case is ETFs get approved next month, and your Bitcoin goes through the equivalent of 2 or 3 halvings in the span of a month, or maybe it just goes up a little bit, and we still just wait out the 8 to 10 years, right? It doesn't matter. The point is that the value of your coin is going to keep going up. All right. Hard Hodl says, do you speak any other languages? I do. I speak Spanish, but I haven't practiced in a long time, so I do get stuck on some of the words now, so I need to practice more of that, actually. Carl says, no poop coins. No poop coins here. Let's go. All right. Next part is the sats per dollar. We know that one pretty well, right? It's how many Satoshis you can buy for a single dollar. And this is the Satoshi symbol, just as the symbol is here on the left corner, is a little shish kebab looking thing. Matthew Digital US dollar. Anyone know? They are pushing that, Matthew. I saw that. I don't know what the symbol means here. This little B. If I mouse over it, will it give me a hint? Nope, no hints. I don't know what it means, but sats per that thing. Let's see, 24, 26. Maybe it's I don't know. There's definitely a correlation with here. Look at that. It's the decimal point moved over what? Twice? I don't know. And then of course we have Coinbase age. Sorry, not Coinbase. Bitcoin's age, which is 14 years, 241 days. Okay, so that's what everything on this chart means, except for these two. We'll figure those out later. But yeah, that is what we got, and that was. Oh my gosh, I forgot to do this. That was why we stacked. Anyway, that was why we stacked, guys. I apologize. I'm all over the place with this stuff. I just did the whole show for the second time. Here we go. We already stacked, but first let's do a stack recap to see what we stacked. Stack. Oops. Stack recap. Oh my gosh. All right, so today we have 10,288,568 Satoshis for the show because I already stacked today. I thought I was live streaming. I went through the whole show, and we bought at We bought at 41,000. Oh, what the hell? Delete this. Ah, that's annoying. Ah, that's annoying even more. I fixed it. Ha! Your face. Okay. So yeah, I guess that's that sucks. That sucks. All right. We bought. First show was a dress rehearsal, but first show was a dress rehearsal, but I actually bought. So let's just go through the segments so we have them on the thing. Time to stack some sats, boys. Let's go. Okay, so today we stacked. Let's see. Oops, we stacked. Where is it? Here it is. There it is. There it is. Is it today or here? We stacked today. Are we doing a double day? All right, let's do a double day then. Do you double dog dare me to do a double day? We're doing a double day, guys. Double day. Let's stack some sats. There we go. $20 worth of Bitcoin. Double day today since the price is down. Let's do that. Here we go. Do a preview here. Yeah, we are gonna do a double day. Why not? Why not? Here we go. All right, today's episode 120. And it's a double day. 120, it's a double day. And here we go. Cut the music. Drum roll, please. So fast now. Wow. Triple dog dare you. There we go. All right, we did another stack today, just now. Let's update the stat. Let's update the spreadsheet. That was a killer stack right there. 12, 11, 23. What's the price? The price of our second stack is pretty close. Let's see. Yeah, let me turn on the music now that we stacked. There we go. Get back in the flow. The price of the second stack was 41,256. 256. We stacked $20 worth of Bitcoin again. $20 and 20 cents. 0.00048478. That's 48,478 Satoshis. Oops. More added to the chat, added to the stream, added to the stack. And now we're at 4.337 million Satoshis. Just like that. 0.103 Bitcoin. I know I'm not your dad, but I'm sure and I'm proud of you. Oh, thanks, Bill. That's so nice of you to say. That's so nice of you to say, Bill. Thank you, sir. Thanks, Bill. I appreciate that, dude. Very nice of you to say that. There we go, guys. Just like that, we've stacked. We've stacked and we updated our sheet. You know, it's like, it's such a cool thing to see that we've spent, that the money we've invested into Bitcoin is, it's growing, right? It's growing. So since May, we're up about $1,000, right? Like, what's gonna give you $1,000 like that just for holding it? You know, like what's gonna increase it? What's gonna increase 28%? Where all the extra work you did, where you didn't have to do any extra work, right? I'm not being lazy. I'm just saying the amount of effort you put in to your work every day, if you work every day, your work week, your work day, it shouldn't be getting devalued like it is with $1, right? It should be something that it makes your savings real. It makes your savings, it multiplies your savings basically, right? It expands your savings because now you're working, now the machine that's designed to steal wealth from you via inflation is working for you, right? So that's the best part. That's the easiest part. That's why you say, like, buy Bitcoin, take custody of that Bitcoin, and repeat or get back to life or move on with your life or go enjoy your fun with your family or friends, whatever you want to do, right? And we talked about this before, and it's one of the things that I like to highlight the most is that there's going to come a time when either next month or, like I said before, in 8 to 10 years, in 4 years, depending on how hard you're stacking, right? It's all individual. How hard you stack today is going to determine how soon you'll have FU money, I guess you could say, right? What up, Phil? Welcome to the stream. How hard you stack today is going to determine how soon you'll have FU money, where you can decide, you know what? I'm going to do what I want. I'm going to do this thing that I've been wanting to do my whole life, but I never could because I have to work in this system that's designed to keep you working and keep you busy, keep you so busy, in fact, that you don't have time to research and understand how the government works and understand how society works, understand how the money works. That's the whole plan, is for you to work from birth to death, right? You're born into debt via the cost of healthcare. Your parents have to pay so much for that process. So right off the bat, you're a financial burden, right? And you work later into your life, and even though if you've done the right thing and you've saved and invested in whatever, those investments and those savings are getting leached away by inflation. So it doesn't even matter. It's like if you weren't doing anything the whole time anyway. You're not going to be able to retire when you wanted to retire based on your savings because you can't keep up with the rate at which the money is being created, the rate at which banks issue credit, So your monetary units that you're holding for your retirement just won't be enough. So you have to keep working later and later into life, so that you work until their dying day. It's sad, right? But little did they know, or little did even I know a couple of years ago, right? That Bitcoin is around, and it's the solution for that, right? It's a solution for that. And if or when these Bitcoin ETFs get approved, there's a meme with the Interstellar cast in a spaceship, and he says like, this little maneuver is going to save us 7 years or something like that, or 10 years, right? Well, that's a good meme, because if you're investing in Bitcoin now and you're getting in pre-ETF, right? The benefits that you're expecting over the 2 halvings or 3 halvings could happen immediately when the ETF gets approved, because the amount of demand that's going to come up will be equivalent to 2 or 3 halvings worth of supply cut, right? So this little maneuver could save you 10 years. And you wake up, the ETF gets approved, your stack is on par with where it needs to be, and you realize that holy crap, I actually don't have to work anymore. What am I going to do with my life now, right? I was expecting to work through and keep stacking another 10 years. You should still keep stacking, right? But now you're free to do the thing that you've always wanted to do, that will, in the future, possibly, depending on what it is you want to do, benefit humanity, right? You're no longer being driven by money making. You're no longer being driven by money getting. That's a good way to use it. Like the money getting that happens in the world today detracts from innovations that we could have had, right? Like discoveries that we could have made, because humanity's focus is on money getting, right? If you take out that money getting and let people choose whatever field they want to get into to study or to learn or to evolve, it benefits everybody. You know, there's technologies that haven't been discovered today that in an alternative universe where money getting wasn't the priority, they're already like leaps and bounds ahead of us in technology and discoveries, because the society wasn't wholly focused on money getting. Okay, so I'll leave you guys with that. The future is good. I think as more and more people understand Bitcoin, it's going to be better for everybody. Again, because it frees people up to study the things, to get to work on the things, the projects that are going to benefit all of us, right? And it's a good thing. That's what I'm most hopeful for. Okay, that's why I Bitcoin. Besides number go up. Let's go, baby. All right, guys. That's all I have for you guys today. Hope you guys enjoyed this episode of the Stack Sats Show. We'll be here tomorrow at 12:30 p.m., 3:30 Eastern, Monday through Friday. But until then, remember, if you ain't stacking, you're slacking.